معرفة.
بسم الله الرحمن الرحيم. In this lesson, let us discuss about structure and mechanism of an Islamic fund. So for example, this is an investor. Now this investor who wants to invest his or her liquidity in a Sharia compliant business would approach an Islamic fund, as we have just discussed in an earlier lesson. Now the relationship which is created between the investor and the fund manager is based upon what structure is used to develop that relationship. Now there could be three structures which could be used. One is a Mudaraba structure, a Wakala structure, and a Musharaka structure. So as I said, the first could be, for example, a Mudaraba structure. The second could be a Wakala structure. And the third could be a Musharaka structure. Okay. Mudaraba, Wakala, Musharaka. What is a Mudaraba structure? A Mudaraba structure is a structure wherein the Mudarib, meaning to say, for example, the relationship between the investor and the fund manager is of a Mudarib and a Rabbul Mal. So the fund manager is appointed as a Mudarib, that is a manager, and the investor is a Rabbul Mal, meaning to say an investor, and a Mudaraba contract is entered into. What is the unique feature of Mudaraba is that in a Mudaraba contract, the Mudarib, that is the manager, can be given a fee only from the profits which are generated from the business. So a Mudarib cannot be given a fee if the fund does not generate a profit. So if the fund is incurring losses, the fund manager who has entered into an arrangement of Mudaraba with the investor will not be entitled for any fee. So this is the unique feature of the Mudaraba relationship of a Mudaraba fund. So that is the main feature. Now in terms of giving a performance benefit to the fund manager, of course in a Mudaraba structure that could be structured wherein the investor could agree with the Mudarib or the fund manager that in case if the fund performs better than a particular agreed benchmark, then the Mudarib would be given an incentive fee. But the main striking feature of a Mudaraba fund is that the Mudarib will not be given a fixed fee. The Mudarib would be given a fee from the profits generated and the returns which come from the business. Now, as we have earlier also discussed, that this is one relationship. There is another important aspect which we have to keep in mind, because this is an Islamic fund, that there would be, for example, a group of Sharia scholars who would guide the Islamic fund on Sharia related matters with reference to in which companies the investment should be done. So the Sharia board provides the Sharia guidelines with reference to what is compliant and what is not non-compliant in terms of the companies in which the investment should be done. So just to understand the structure very well again, there is an investor or a group of investors, of course, who would invest the fund, and if they use a Mudaraba structure, then there would be a fee which is given to the fund manager from the profits which are generated from the business, and there is a Sharia board which would advise the fund manager on the parameters which should be kept in mind in terms of investment. And the Sharia board on a regular basis also conducts a Sharia audit with reference to how the Sharia investment has been managed by the fund manager. And hence the Sharia board is an independent board and does an annual audit on the investments and provides its certificate to the fund manager, which could be shared again with the investors, so that the investors is at peace that his or her investments are done in a Sharia compliant manner. So this is the Mudaraba structure. Now let us go to the, for example, the Wakala structure. So what we have understood what is a Mudaraba structure. Now let us go and discuss about the Wakala structure. Wakala is nothing but an agency structure. So in a Wakala structure, the investor would enter into an arrangement wherein they would appoint the fund manager as their agent to invest the fund based on the guidelines, of course, provided by the Sharia scholars in Sharia compliant avenues or businesses, and gives them the return. The unique feature of Wakala is that in a Wakala arrangement, a fixed fee can be agreed. So fee can be fixed. But in a Mudaraba, the fee cannot be fixed. So this has to be very clear. And in a Wakala structure, the fund manager is acting as the agent of the investors. And in the Mudaraba structure, the fund manager is acting as a Mudarib, or the manager of the investors. Now, let us come to the third structure, which is the Musharaka structure. Musharaka. In a Musharaka structure, the fund manager is in fact also an investor in the fund. Meaning to say, if the relationship between the investor and the fund manager is based on the concept of Musharaka, then what will happen is that the fund manager will share from the profits which are generated from the investment. So the investor and the fund manager would become partners in the investment, and whatever profits are generated will be shared between the fund manager and the investor on an agreed profit sharing ratio. But here the important point is that the losses should be shared with reference to the amount of investments done. Profit and loss sharing. In an Islamic fund,